George Kilpatrick, inspiration for the nation. It is time to check your money. And of course, we're here with our money maven, Vicki Brackens, president of Brackens Financial Solutions Network, LLC, and a registered representative of Lincoln Financial Advisors Corp., member SIPC. Vicki, how you doing on this up and down, volatile roller coaster of a financial week in the Qs and in the nation?
I'm doing great, George. I will say this, though. What a difference a week makes.
Right?
You know, we all have what I would call something like our guilty pleasures.
Yes.
Things that we love to do but may not really have a real productive purpose.
Mm-hmm.
Well, George, one of my guilty pleasures is watching Wendy Williams.
Mm-hmm.
So in the spirit of Wendy Williams, I'm asking our listeners today, how you doing? You know, did I do that right, George?
No.
Okay. Tell me how it goes. Okay.
Wait, how you do it? You gotta do
doing?
You gotta do the hands down too.
All right. Okay. Hold on. How you doing?
Yeah.
All our listeners, because this has been a week of change. Some would say rapid change or increased market volatility. Oil prices were down. The stock market was down. Bonds were down. Just a week that I would say in general was a down week.
Yeah.
And even though we had planned to talk about what's important about money to you this week,
right,
with all the headlines, I thought it would make a lot of sense for us to go ahead and at least touch on this subject a little bit, because there's probably a lot of questions.
Yeah, because I called you in the middle of the week.
Yes, you did.
And I said, Vicki, you know, we saw up, we saw down, we saw in between, and I needed to know, like, how you doing?
How you doing?
Right?
Exactly.
Did I ask you? I said, how you doing?
That is exactly what you asked me. So remembering everyone, I'm reminding everyone, remember this. I am not giving specific investment advice. You should see your own investment professional for specific advice. But here are 5 things that I'd like for everyone to remember. Number 1, you need an investment policy statement. This week is a prime example as to why you need an investment policy statement, which is a plan for your investment philosophy that's going to guide you through the decisions on where and how to invest your money. Please work with someone to get an investment policy statement or an investment policy plan in place. We are hearing that the market is making a correction, but you might not really understand what correction really means. That is defined as being basically a 10% decrease in value. From 1987, by the way, through today's date, okay, in 1987, which is when I started my career, the market was, I hate to say this, 2,200.
Wow.
2,200. Today, that, or a 10% correction back then would have been about 220 points. Today, or just before the correction started, it was around 26,000. A 10% correction is 2,600 points. Mm-hmm. So when we see the headlines, if you had paged back to 87, it would have been big headlines at 220. And today it's big headlines at 2,600. But everything is relative. It's still 10%. Right. And as the market continues to climb, and it will one day start going up again, the next time we have a correction, that will be that same 10%, but it's going to be a much bigger number. By the way, did you know that between 1900 and 2016, there were 125 corrections, meaning that 10% decrease in value? That's about an average of 1 per year. If you go back and look at the research, on average, once a year, we end up with a 10% correction. The difference right now, though, is it's been we were over the normal cycle time.
I mean, just a few moments ago, people were thinking that we were going to hit 30,000 in the Dow.
So, and we will.
Oh, we will. Okay.
We will. One day.
One day.
Okay. It's just not this week.
Right,
okay?
right.
But if you look at the momentum and history, remember I said in 1987, when I began my career, the Dow was at 2,200. 2018, just a week ago, a little over a week ago, it was at 26,000. So it will hit that 35,000 number and something else even higher in the future. But it never goes in a straight line. This change, though, that we're really feeling and what's really making a lot of people feel uncomfortable is a return to the normal market volatility.
Sure.
All right. Here's another thing that I want everyone to remember. only about 50% of American households have any market-influenced assets. To grow wealth, and this is what we've talked about all along, to grow wealth, you need to participate in market-driven assets, bonds and stock, hard assets and real estate and commodities. If you don't do that, if you bury your head in the sand and start just saying, I've got to run for the hills because we've had this correction, you are going to miss opportunities long-term in the market. So
one of the things that you want people then to do is to take another look at their investment plan and some other things.
Right. I want you to go back and look at your investment plan, look at your liquidity needs, determine how much you need as far as liquidity, and remember, again, please, that everything is relative.
Yeah.
Okay. All right. So, George, last week I introduced what I call our Black History Month moment, and I thought today we'd just continue that scheme and go forward.
I love it. I love these.
Good.
I do. I absolutely love these because they're introducing us to people that we may or may not know. And I call it the little known Black history fact based on some money.
Based on money.
That's exactly. right.
You picked up my theme. It's
I got
Black
you.
History Month based on some money.
Listen,
okay?
we here, sister.
All right. So from the Forbes billionaire list, I want to introduce to everyone Robert Smith.
Yeah.
Okay. Now, Robert Smith, based on the last Forbes report, which was produced 2/9/18, so I don't think you can get any more current than this, had a net worth of $3.3 billion. He is a former Goldman Sachs executive. He started a private equity and venture capital firm called Vista Equity Partners in 2000 in Austin, Texas. Vista has over $30 billion in assets under management. It's one of the world's most successful hedge funds with consistent double-digit returns.
For people that don't know what hedge funds are.
Well, I tell you what, I'm going to explain hedge funds next week. I'm going to make you come back.
Right, because that's a good one, right?
It's a very important one.
Okay? Right, because we hear that term thrown around all the time, and we know that it's a source of great wealth, but it also can be
a source of great risk.
Yes.
And so rather than just surface it so that there'd be confusion, I'll start with hedge funds next week.
All right.
Okay. As a college student, Smith secured an internship at Bell Labs. Listen to this. After calling the company every week for 5 months.
Yes.
Persistence. We talk about this all the time. Okay. You know, sometimes I hear, well, I made a phone call, but they didn't return the call. Then call them again.
Right.
And call them again. If you really want it, you must stay persistent. He went on to work at Kraft Foods and then finally at Goldman Sachs before launching Vista. You know, one of the things that Forbes does is they chart what's called your self-made millionaire ranking. You know, how much of this was all your hard work.
Right.
And it's a scale of 1 to 10, by the way. His scale is 8.8, which means it was first-generation wealth. It was all created, or the majority of it created by him. Here's something else I love. He is a Cornell graduate.
Big Red, baby.
Big Red, right here in Central New York. He pledged over $50 million personally and through his foundation to the university in 2016.
Now, you know, I knew he looked familiar because I highlighted him on my Facebook page when he did that in 2016. Because I was like, this guy looks familiar to me. So we are in sync. Go ahead, sister.
Okay, then. And so finally, I have a question to all of Central New York, and we've had this conversation before on some of the other shows. Why is he in Texas and not in Central New York?
That's a good question.
He graduated from here.
Right.
He got his education here.
Right.
Why is
and he worked in what? New York,
and he worked in New York. So why is he in Texas, although that's my home?
Right.
Why is he in Texas and not in Central New York? But finally, Smith is the first African-American to sign the Giving Pledge, which is a commitment to contribute the majority of his wealth to philanthropic causes. Many of you may have heard of the Giving Pledge, which was what Bill Gates established along with Warren Buffett, just to make sure that their philanthropic issues or that their vast estates were passed on to philanthropic issues. And finally, in 2016, so in 2016 he gave away $70 million. $20 million of that went to the National Museum of African American History. So to everyone,
the new one in D.C.
In D.C.
Yes.
Okay? I'd like for you to look at our Black History moment for this week about money, okay, and focus on and do some more research on Robert Smith. Next week, we'll get back on track and look at what's important about money to you. But for more information on today's topics or anything else that you'd like concerning your financial well-being, please visit our website at brackensfsn.com.
And of course, Vicki Brackens is the president of Brackens Financial Solutions Network, LLC, and a registered representative of Lincoln Financial Advisors Corp., member SIPC.